Crypto Hotep here with another investing video. We are on week 107 of the family portfolio and dividends tracker. Thank you guys for tuning in as always. I really appreciate it. If this is your first time watching these videos, feel free to go to week number 1. Go to the channel first, subscribe, put on your notifications so you know when I drop a video. Go to week number 1, and that's when I will go over the whole methodology of these videos and why I'm doing it. So, basically you're following an investing journey with me and my family. These are the portfolio that you will see is through M1 Finance. A link will be in the description below. And basically we've been doing this for over 2 years now. So over 2 years now, we've been investing into companies that my family chose. And basically, we're just tracking that journey. None of this is financial advice, but it's more so like a investment journal, just dictating the feelings, the thoughts, the ideas that we have going through this investing journey, and also to show that you can build generational wealth. It takes time, but you can build it through consistent deposits into the market and just buying well-known and well-ran companies. Okay, but again, not financial advice. Please do your own due diligence when investing your money, your hard-earned money, into crypto, stocks, whatever the case is. But we'll jump in, guys. As always, before we go to week 107, we go through some of the news that we have for this week. So again, we typed it into AI, asked for a brief rundown on the worldly news events between May 4th and May 11th, just to see if anything stuck out that would impact the market. So a couple things. Crypto showed resilience with Bitcoin holding the 80,000 level and Ethereum trading near 2,300. But Crypto Hotep, we're talking about stocks. I understand that, but crypto is still a market that somewhat dictates, not a lot, but it dictates certain price movements in the stock markets here. So when we go to the events, though, we have the April Nonfarm Payrolls. This was released last week, and it was actually pretty good. These were bullish numbers, 115,000 reported jobs. It was well above 62,000 that was forecasted, so that's good. Also, the unemployment rate held steady at 4.3%. That's also very good. It didn't go up, didn't go down. It just kind of remained flat. We'll take that, and we'll also take the upped job reports number. That shows that the economy supposedly is doing well. And I use that in quotations because, the economy, if you live in the economy, it's a totally different story than what's being depicted by these numbers here. Okay, Q1 earnings momentum continued. Over 40% of S&P 500 companies reported, with an astounding 83% beating earnings and 78% topping revenue forecasts. That's really good to see. Again, it also dictates some of America's economy and these established companies beating earnings, showing growth, and showing good numbers. Everything that the market wants to see, right? And I think if I could take just a quick kind of dovetail here with the farm payroll numbers and also the earnings numbers here, that should give you probably your biggest sign that you should invest your money right there, because that's what's going to generate wealth. I say this all the time, but saving your money is not going to generate wealth, and you should be seeing that with the way things are going in this economy, with the price of gas, with the price of groceries, everything like that. However, investors, even though they still live in this economy and they still feel the sting of these things, they still feel good though, because their money is actually doubling, could be tripling because of these good numbers from the companies. So again, this should be a sign, hey, do your own due diligence, invest your money. Iran ceasefire tensions resurfaced. This was last week. So President Trump stated the ceasefire was on life support after Iran's counter proposal was deemed unacceptable. So again, oil prices are dancing again. They spiked 3%. So, gas prices could follow suit with this. But again, this is a week-by-week basis with Iran and the U.S. Kevin Warsh's confirmation process has advanced, so that's good. He will be taking that role as new Fed chair. Powell's term as chair ends May 15th. Okay, something to keep in mind here. But he will stay on. So Jerome Powell will stay on, maybe in somewhat of a kind of administrative role or something like that. He did mention that. Okay. Tomorrow we have April CPI. So volatility is going to be among us. So April CPI numbers here. The consensus here is 3.7%. CPI or inflation, 3.7%. So that's what we're forecasting. So what we would like to see is 3.7% or below. That's what's going to be bullish. I don't think we will see that. Unfortunately, I think it will be higher than that only because of the gas. This number, the April, or not the April CPI, but the March CPI that was reported in April didn't have gas factored in because that hadn't hit us yet. But I think this will hit us, and I think this number is going to be higher than 3.7%. So that's not going to be, to me, that won't be that good, but we'll see. Then we have April PPI, and then mid to late May, which is right now, the Trump and Xi summit in China. So big things are coming about there. And we also have a potential for the Clarity Act in its final states for crypto. Okay. So, all in all, good things going on here. The Iran, the U.S. piece is still dictating the markets, but we got to take that week by week. So all in all, keep your money invested, buy the dips, and I think, everything will be fine. Before we go into week 107, let's go to week 106. Our balance saw us with $4,238.48, money weighted rate of return of 3.08%, dividends earned of $15.06, and then market gain of $107.71. So decent enough showing. What happened this past week? So for 107, our balance is $4,293.51, money weighted rate of return of year to date of 4.07%. Love to see it. Market gain of $146.75, and dividends earned still $15.53. So what actually happened between this week and last week? So between this week and last week, we did have a couple buys, and it was a deposit week. So again, we had a dividend with lows of 27 cents here. So that was our only activity for dividends, but we did have a deposit. We had our deposit of $15. Again, these aren't monumental numbers that we're just throwing into this portfolio. We're building our wealth over time very gradually. And if you want to see how far we've come, go to that channel, go to week number 1, and I'll even put a link for the week number 1 video in the description, and you'll see what the balance was. The balance was only a couple $100. So it's just kind of sticking to the plan and keeping with the plan, even if the market dips or rips. So what did we buy? We bought some Cintas, McDonald's, Sony, Celsius, and Costco. Okay. Now let's go to each of my family members' portfolio, and let's see what's going on. We always go bottom to top. Unfortunately, my wife is at the bottom this week. With the lowest balance, we have $628.31, money weighted rate of return of 0.43%, still in the green though. Dividends earned of $1.60. So as of right now, we have Google, just a steam rolling engine here, up over 23.33%, carrying the portfolio on its back. Pepsi still in the green at 5.11%. Tesla is inching up in the green now. I've said this before, and I said this last week, is watch when Tesla turns green. Everything's just going to skyrocket, and you're seeing glimpses of green here. Microsoft, we're still down in that, over 10%, and Celsius, unfortunately, down over 33% on Celsius. You know what? It's we've had a nice trip with Celsius. We're not doing anything with Celsius at all, but I just want to make a point. We've had a nice trip with Celsius. We were up 50%, down 34%, up 60% at one point with Celsius, down now 33.4%. With these volatile companies like Celsius, you have to be and you have to have the stomach to work through these waves, these dips, these valleys, and be prepared for the long haul, because you're going to see them. We've been at this negative 33% before in my wife's position for Celsius, and we've just been buying the dip on it. So nothing to change here. Next up, let's go to our youngest. Our youngest has a balance of $643.01. Money weighted rate of return year to date of 6.7%, or 6.70%, I should say. Dividends earned of $1.36. Starbucks leading the charge here. As I mentioned before, Starbucks has turned around very nicely. Tesla following the portfolio of my wife and our youngest, it's inching up. It's showing green. All of my family members that have Tesla, you're going to see a jump in their portfolio significantly, I foresee, in the next couple weeks. Apple up over 8% on Apple. Love it. Costco doing what Costco does. Whether the market and the economy is up or down, Costco is still going to Costco. Doesn't matter. Up over 16%. And Sony down over 14%, almost 15%. But we are closing the gap on Sony. I think Sony has bottomed out here. So watch out for Sony in the next couple weeks here. Watch out for Sony. Okay. Let's go to our middle. Our middle has had a great showing. One of the only double digits in money weighted rate of return at above 15%, at 15.06% money weighted rate of return. $655.30 is the balance. $80.11 is market gain. $1.96 as dividends earned. And everything is showing green except Sony. So Amazon, boom, over 19%. Target, boom. Turnaround season, just like Starbucks, up over 22%. Costco, we just talked about Costco, up over 16%. Google, we talked about Google with my wife's, up over 26%. Tesla showing those glimpses of the green here, 2.58%. Starbucks, positive 26%. And Sony, unfortunately, we're down over 14%. But I just mentioned about Sony's potential bottom out here. So I think our middle has one of the best portfolios, if not the best portfolio out of anybody this year. But it wasn't like that, though, guys. Do not get it twisted. It was not like this with our middle last year. Our middle was down here last year, but that's the thing with investing. When you believe into those companies, when you believe in the mission of the companies, when you thoroughly understand what they do, you understand how they make money, you understand their competitive advantage, and you don't mind buying dips on the companies, then you will take the bumps and bruises that come along with investing here. Our middle's portfolio is ironclad. All those companies are really good companies, and most of the time they're leaders in their respective industry. So it just makes sense right now that our middle is reaping those fruits of some of the harder times that they have with their portfolio. Okay, let's go to my portfolio. I dropped one spot here, but my balance is $1,170.77 with a negative 0.66% return year to date. Dividends earned of $7.48, market gain of a negative $15.12. So what's going on? Technology's okay. It's just 7.46%. But what's happening is finance. Finance is down, negative 8.97%. Visa's slowing me down, and Moody's here. Okay, so the banking industry right now is not doing so good. Makes sense. A lot of things related to finance aren't doing really well because the economy's not doing so hot. Okay, so once this turns around, you'll see this shortly, or not shortly, but you'll see this when the economy starts to flourish, when we start getting some breathing room in the economy. You can see this turn around. But I think this has to do also with some of the interest rates and some of those pieces. So we will see this hopefully change with Kevin Warsh coming in. We may see this change, but more to come. Real estate, this is O. O is my moneymaker. I am not selling O by any means. It is one of the best stocks that I hold, period. It is a great dividend generator. And this year, it is doing numbers. So my market gain on O is above 12%. That's amazing, with dividends included. Industrials and energy, unfortunately, that's down as well. That's Cintas and that's Waste Management. I don't mind buying these two companies on the dip. These are just well-known and household names. Cintas and Waste Management, they're not going anywhere. Waste Management, nobody's firing Waste Management, and trash is king in my book. So I will buy them all day. Let's go to consumers and staples and shopping. That's just Costco, and that's Lowe's. Lowe's, we have the dip on. Costco, we've already talked about. And pharmaceutical. Pharmaceutical is AbbVie. AbbVie's still dipping. AbbVie is also another household name that I really like. I like this, and I like also Pfizer. Pfizer didn't have that much of upside to me as AbbVie does, so that's why I went in on AbbVie versus taking a position in Pfizer. But for that reason alone, I feel really good about AbbVie in the long term. I don't think that company's going anywhere. And last but not least, we have restaurants and food. We have the GOAT, Coca-Cola, and then Domino's Pizza just having a rough year. All in all, rough year for Domino's Pizza, not good at all. And it makes sense. Again, guys, when the true economy does a 180 and everything reverses and goes down, the first things to go are excessive spending or discretionary spending, right? And if those fast food giants like Domino's Pizza, if they're not keeping up with making budget-friendly items, then it's going to affect the company's organizational structure as well. And I'll give you a good example of this when we go to our oldest portfolio. So let's go to our oldest portfolio. Top spot here, $1,196.12, almost cracking $1,200 here. Up over 4.16% money weighted rate of return year to date. Market gain of $43.51. Dividends earned of $3.13. So what I mean is, if you look at McDonald's, even though we're down on McDonald's, down over 9.89%, McDonald's is at a low. However, they have showed great numbers in their earnings. They've beat their earnings. They have plans in place for the American consumer, especially during these downturns. They have more value items on their value menu, and they're doing more things with trying to introduce more items that appeal to younger people, like those refresher drinks and those type of things. So, there's a difference between McDonald's and the Domino's Pizza. So I think McDonald's is kind of taking this economy the way it is right now. It's just a small blip, but they're trying to make as much money as they can, doing different items, pulling different levers, I should say. Tesla here, we're in the negative here in our oldest position. That's okay because it's only 0.04%. So this is a little small blip. This could change by the end of the week. Costco up over 16%, just like everybody else. And then Apple up over 8%, just like our youngest here. But very good portfolio, as always, the most simplistic portfolio of anyone, but has a top spot this week here. And so for week 107, that balance for the family portfolio is $4,293.51. Money weighted rate of return year to date 4.07%. Dividends earned of $15.53. Market gain of $146.75. Guys, if this video is helpful at all, feel free to like, subscribe, comment, share the video, put the notifications on. Let me know what you think. Let me know if I should make the videos longer, shorter, and also let me know what you're investing in as well. But as always, guys, thank you and happy investing.